Hey, welcome back to YT Finance, and today we are talking about the top stocks to buy right now, what stocks Cathie Wood of ARK Invest is currently buying, and why short sellers are attacking a SPAC that Donald Trump is involved in. We will also discuss what the latest PLTR stock news is pertaining to Palantir Technologies as a company. Then lastly, we will go over Senseonics SENS stock to determine if it would be wise for someone to sell shares after Senseonics gains FDA approval, or if they should hang on to their SENS shares for a long-term position. Go and press the like button right now for Cathie Wood, PLTR stock, or SENS stock news. Comment down below what you think about short sellers shorting Donald Trump's SPAC into the ground. Turn on all subscription notifications to stay informed, and now let's get right into today's stories. Investors who follow Cathie Wood or are invested into her ARK ETFs have been very pleased lately with ARK Invest's results, considering how Cathie Wood's largest holding, which is Tesla, has been doing extremely well lately. But while Cathie Wood loves her TSLA stock, she has also been buying up other companies to brace herself and her ARK ETFs for the upcoming market headwinds. And those are the stocks that we are going to be talking about right now. For starters, let's look at some of Cathie Wood's largest buys recently regarding her ARK ETFs. For ARK's FinTech Innovation ETF, ticker symbol ARKF, Cathie Wood has bought over 2,000 more Amazon stock, ticker symbol AMZN, 235,000 DraftKings stock, ticker symbol DKNG, 210,000 Robinhood stock, ticker symbol HOOD, and 220,000 UiPath stock, ticker symbol PATH. For one of my favorite ETFs, we have the ARK Genomic Revolution ETF, ticker symbol ARKG, which focuses on revolutionary healthcare technology. Cathie Wood has added over 69,000 SomaLogic stock, ticker symbol SLGC, and 67,000 Arcturus Therapeutic stock, ticker symbol ARCT. Next, we have the ARK Innovation ETF, ticker symbol ARKK, which added 78,000 shares of Pacific Biosciences stock, ticker symbol PACB, 103,000 shares of Twitter stock, ticker symbol TWTR, and 12,000 shares of Roku stock, ticker symbol ROKU. Next, we have the ARK Autonomous Technology and Robotics ETF, ticker symbol ARKQ, which added over 211,000 shares of Nano Dimension stock, ticker symbol NNDM. There's also ARK's Next Generation Internet ETF, ticker symbol ARKW, and she also added 179,000 shares of LivePerson, ticker symbol LPSN, 25,000 shares of PagerDuty, ticker symbol PD, 202,000 shares of Skills, ticker symbol SKLZ, and 301,000 shares of Snapchat, ticker symbol SNAP. Lastly, we have the ARK Space Exploration and Innovation ETF, ticker symbol ARKX, and Cathie Wood added 21,000 shares of Blade Air Mobility, ticker symbol BLDE. She also added 73,000 shares of 3D Systems, ticker symbol DDD, and 354,000 shares of Markforged, ticker symbol MKFG. So feel free to at least add these types of stocks to your watch list, because Cathie Wood is preparing for market headwinds, which will cause her ETFs to be more stable if the market ends up plummeting. But now let's talk about Digital World Acquisition Corp, ticker symbol DWAC, which is a SPAC that Donald Trump is involved in to take his media company public. The DWAC SPAC has fallen around 30% today, especially after multiple institutions, including Iceberg Research, have announced that it will be short on DWAC stock. This SPAC is supposed to take Trump Media and Technology Group public, but it is losing momentum day by day. However, it could end up regaining momentum afterwards, especially if the short interest decides to climb so high that a short squeeze occurs. The current stock price sits at around $56 currently, and this blank check company has yet to seek shareholder approval to actually close on this merger. An initial press release said this, and I quote, "Transaction values Trump Media and Technology Group at an initial enterprise value of $875 million, with a potential additional earn-out of $825 million in additional shares, for a cumulative valuation of up to $1.7 billion, depending on the performance of the stock price post-business combination." End quote. So according to this press release, a $67 price target, which some people hold, is much too high for this stock, at least right now. However, the good news is that this SPAC CEO told Reuters that the merger will be completed soon, which is great news, especially if you are invested into this stock just to support Donald Trump. Now let's talk about Palantir Technologies, which is a data mining and analytics company that has great fundamentals and fantastic long-term growth potential in my opinion. The only slightly concerning part about PLTR stock is that the company is very secretive and political news tends to move it very easily. A secondary problem is that more insiders are selling the stock, but this is no need to panic because executives can get paid in stock and they want to cash out their shares so they can be paid. It is very possible that executives just want to exchange their shares for cash to buy helicopters and yachts, as this article puts it, but it does beg the question, if Palantir is such a game-changing company, why sell any stock at all? According to Guru Focus, insiders are only selling and none of them are buying back stocks, which can be a distracting reality, especially if you are bullish on PLTR. Now, this does not change my personal bullish analysis at all on the company because I think these executives understand opportunity cost, because if these executives think that the market will be very volatile or even crash in the near future, it's better to liquidate their stocks now and have cash on hand to buy into other stocks or rebuy Palantir stocks instead of being caught off guard and their PLTR stocks are now worth less. Much of Palantir's political turmoil stems from the fact that they fight against illegal immigrants from crossing the border from Mexico to the United States, which according to Pew Research Center is at a 21-year high. Now, people speculate that if Donald Trump somehow ends up back in the White House in 2024, then he will use Palantir's technology to ensure that space satellites are constantly monitoring the border to enhance border security. This will allow Palantir to gain even a stronger foothold in future government contracts, especially if they come directly from the White House. This would also make Palantir's co-founder named Peter Thiel very happy because he is an avid Trump supporter. So if Trump did end up coming back to the White House, Peter Thiel would absolutely go berserk and Palantir stock could even rally substantially. But even without Trump becoming president again, Palantir has been doing extremely well on their own because the company has closed over 62 deals of $1 million or more just in the second quarter of 2021. 30 of those deals were worth $5 million or more, and 21 of those deals were worth over $10 million. And Palantir is not supposed to ease off until 2025, which means more contracts are on their way. This is why investors are excited about this company due to their projected rapid growth and their ability to land major contracts. For quarter 3, Palantir is projected to bring in around $385 million, but I personally think that they will beat that forecast on their approaching earnings report, which has now been officially confirmed for Tuesday, November 9th. Now let's talk about Senseonics, which develops and sells continuous glucose monitoring systems for people with diabetes. The main question about SENS stock right now is, should investors sell right after their 180-day CGM system gets approved by the FDA, which could cause the stock price to rally? Well, the answer is that it depends. So I'll tell you what I would do. First, there is a small chance that the stock price does not rally based on this catalyst, but that is highly unlikely. So if this does rally, the choice is either to take profits then or to hold long term regardless of the stock price, because it's going to come back down eventually. And personally, I like to do a bit of both. If I plan on holding long term, once the stock price surges based off of this catalyst, I will sell some shares to make up for my initial investment into the company, and then I will leave the rest of it to go long term. This way, I use this catalyst to make up my initial investment, and then I will use the long-term investments which are left over for future growth. This is also a fantastic risk management strategy because you literally don't lose any money if you do the strategy because you've already made up for the money that you initially put into the stock. The reason why I would not want to take all of my money out of this stock while the stock price is high due to the FDA approval catalyst, it's because once their 180-day system can be sold in the United States, their revenues are expected to explode from just $15 million this year to over $200 million by 2025, which will generate great hype for them as they continuously beat their revenue projections on future earnings calls, which would give even more smaller catalysts for us to trade off of. So the FDA approval catalyst is no need to just get rid of all of the stocks once you ride off that catalyst, because there is also going to be a longer term payoff. Currently, the SENS stock price is around $3.30, and according to Portfolio Grader, it has an A+ rating, which means the stock is a clear buy right now, and also by 2027, some people speculate that it will have a $26 price target. However, I think that is extremely bullish, but what do you all think? Comment your thoughts down below. Remember to like this video, especially if you made it all the way to the end. Subscribe if you are new, and I will see you in the next YT video.